Welcome back to the channel, where today's comprehensive report contains information that may be one of the most critical updates you've fully heard in several years. If you have been diligently holding Vietnamese Dong, Iraqi Dinar, or closely tracking global currency fluctuations, then you must listen with extreme focus because the developments currently taking place may fundamentally alter your immediate next financial decision. A definitive new wave of market indicators, banking behaviors, currency activity, and financial reports across numerous states is collectively painting a clear picture that is significantly louder and more precise than anything we have previously witnessed. Savvy investors are now calling this period a major market shift. Professional analysts are labeling this a key pre-positioning window, and everyday currency holders are urgently asking one central question: what specific action should I take next? Today, we will methodically break down every single component for you: the verifiable movement occurring behind the scenes, the escalating chatter regarding specific exchange activity, how the Dong and Dinar markets are structurally shifting, why the current timing is absolutely critical, and what necessary steps you should strongly consider taking before the next major window officially opens. So, please quickly grab your notebook, completely silence all unnecessary notifications, and stay engaged through the entire breakdown because your next strategic move is more consequential today than at any point before. If you have been closely monitoring the Iraqi Dinar market, you are already well aware that something undeniably unusual is currently happening. The overall volume of chatter originating from banking insiders, currency holders, and private financial groups has aggressively surged significantly higher than at any point throughout the past year. People are consistently reporting various unusual activities: sudden verification requirements, blocked foreign currency orders, discontinued sales of previously readily available currencies, and unexpected bank closures for systems updates. These operational changes are demonstrably not random or coincidental. They typically precede major regulatory or definitive rate adjustments. The dinar remains an official controlled currency, and when controlled currencies begin showing abnormal behavioral patterns, it often serves as a strong indication of a planned shift somewhere deeper within the system. Investors across the United States are reporting widespread quiet zones where most banks strictly refuse to comment on the dinar altogether, a behavior that only serves to dramatically increase speculation. Whether this current operational shift ultimately leads to a measurable rate change, another stabilization step from Iraq's central authorities, or a new policy announcement, one critical fact is perfectly clear: the market is simply not behaving the way it was 6 months ago. And those who are watching the situation most closely are actively preparing for something much larger and more complex occurring behind the scenes of the financial system. Now, let's turn our attention to the Vietnamese Dong because this currency is rapidly gaining more and more attention than ever before. Export surges, economic fluctuations, and important regional trade agreements have strategically positioned Vietnam as one of the fastest-growing economies in all of Southeast Asia. With ongoing digital payment modernization and key economic reforms, numerous analysts suggest that the Dong may be strategically positioned for gradual, sustained strengthening rather than any sudden, explosive changes. But when a national currency successfully strengthens slowly and consistently, long-term holders can realize significant benefits once global markets stabilize or when official exchange windows eventually open. Many of our loyal viewers have recently written in asking specifically whether the Dong could experience a rate shift comparable to the widespread speculation surrounding the Iraqi Dinar. While nothing official has been confirmed by authorities, what we are consistently observing is increased scrutiny when buyers attempt to place bulk orders, tightening control on bank-level Dong trade, and more definitive restrictions on purchasing larger amounts. This specific kind of operational tightening typically occurs when regulators are aiming to strictly control the currency movement ahead of any planned financial adjustments. If you are currently holding Dong, this is a crucial moment to remain highly alert and to continue actively monitoring all regional economic indicators and official statements. Across the entire United States, Verifiable holders of the Vietnamese Dong and Iraqi Dinar continue to report highly unusual events that strongly suggest extensive internal preparation is underway at specific financial institutions. For example, in several states, foreign currency desks have been temporarily closed with no official public explanation. Other institutions have suddenly implemented new ID requirements, even for very small exchange amounts that previously never required verification. And in numerous metropolitan areas, individuals have consistently reported being told that certain currencies are currently unavailable, even though those same banks previously sold them without any hesitation. These widespread, consistent patterns do not, by themselves, constitute confirmation of a global revaluation event, but they definitively confirm that something significant is happening at the operational, ground level. Anytime major banks shift established policies without issuing a public announcement, it is almost always structurally tied to internal updates, regulatory instructions from higher authorities, or compliance changes. For all currency holders, these compelling signals serve as strong reminders that sudden, material changes can, and often do, occur quietly without any prior warning. Being thoroughly prepared ahead of time is absolutely essential and your biggest advantage. Whether these operational developments ultimately lead to a staged rollout or a significant market event, your personal readiness is the singular factor you fully control. When we discuss the necessary steps for preparation, every viewer consistently asks the same question: what specific documents do I actually need if a major exchange opportunity suddenly opens? While no official, public blueprint has been released, long-standing investor logic strongly dictates that you must always keep your documents meticulously in order. Having your primary identification immediately ready, such as a government ID, passport, or driver's license, prevents you from scrambling in a panic later on. Being fully able to prove your original purchase, such as having transaction confirmations or physical receipts, immediately adds crucial credibility to your holdings. Organizing your physical currency by denomination ensures a much smoother verification process, particularly if you hold substantially larger amounts. Many individuals consistently overlook these small, yet absolutely critical, preparation steps, and when the official window opens and moves quickly, even a minor delay could tragically cost you a priority appointment slot. Additionally, creating a simple, personal financial plan and deciding whether you intend to invest, save, or allocate the funds towards specific long-term goals can successfully prevent rushed, emotional decisions later on. Preparation is not about blindly expecting an overnight event. It is about strategically positioning yourself responsibly so that you are never caught unprepared when crucial market conditions finally shift. Let's move into the crucial topic of market shift behaviors, because fully understanding these specific patterns helps experienced investors consistently stay ahead of major changes. Right now, professional economic analysts are closely tracking Iraq's currency auctions, oil output agreements, budget planning cycles, and all major international partnerships. Each of these specific factors profoundly influences long-term strengthening and overall rate stability. Iraq's strategic moves toward global market integration, increased transparency, and digitization strongly suggest that the nation is actively steering its economy toward a much more stable financial environment. Meanwhile, global inflationary pressures, gold reserves, and the US dollar index all continually impact every emerging market currency. When major global markets adjust their positions, currencies like the Dong and Dinar can either significantly lose or gain strength depending on how their respective governments strategically respond. What makes this precise moment so unique is the fact that multiple global markets are significantly shifting simultaneously, not slowly but with notable speed, and both Iraq and Vietnam are actively part of that synchronized shift. This convergence creates a prime environment where proactive, informed holders are watching extremely closely for clear signals of when a structural update or an official rate correction might finally occur. One specific thing that has numerous investors on high alert is the rising number of people consistently reporting private notifications, pre-appointment messages, or exchange-related calls. While these individual reports absolutely cannot be fully verified, The sheer volume of these unconfirmed reports has dramatically risen. Many individuals claimed they were contacted by people linked to prior currency groups, wealth managers, or former bankers, strongly encouraging them to stay fully prepared. Regardless of whether these calls genuinely reflect internal movement or are simply a product of rumor cycles, the consistency and timing across numerous states is extremely notable. Whenever market chatter increases simultaneously in multiple, distinct regions, experienced investors analyze the broader trend rather than focusing solely on individual testimony. Trend analysis is one of the most reliable and effective tools in the currency world, and right now the overall trend is rising rapidly. No one should ever make major decisions based solely on someone else's story, but absolutely everyone should pay close attention to the undeniable collective patterns. These widespread conversations strongly suggest that all currency holders should remain cautious, aware, and fully prepared, just in case an official, structured window opens significantly sooner than anticipated. Your next move truly matters in this window, and here is the reason why. If the market is rapidly entering a pre-positioning phase, any unforced delays could cost you dearly. One of the single biggest mistakes currency holders consistently make is prematurely assuming there will always be plenty of time available to act. But if a new exchange opportunity or rate window opens for only a very limited duration, those who hesitate often permanently lose their place in the queue. Another massive risk is waiting until the very last minute to verify currency authenticity or organize crucial documents. Many holders frequently misplace receipts or even completely forget the secure storage location of their physical notes. Staying fully prepared is not about succumbing to panic. It is fundamentally about readiness. Opportunities consistently favor the organized and alert. Those who responsibly and seriously treat this moment strategically, instead of emotionally, are the ones best positioned to benefit the most. The Iraqi Dinar market is structurally different today than it was last year, and the Vietnamese Dong is rapidly gaining significant traction in global economic conversations. In a fast-shifting financial landscape, the specific decisions you make today will decisively shape your outcomes tomorrow. Let's transition to discussions about global liquidity patterns. Financial experts have been observing substantial movements of institutional capital across numerous markets. When global liquidity decreases in certain regions and simultaneously increases in others, it often subtly hints at major coming adjustments. Several global funds have been actively reallocating major assets away from unstable markets and strategically moving them into growing, emerging economies, specifically those tied to manufacturing, oil, and rapidly expanding trade. Iraq perfectly fits this specific category due to its expanding energy sector, renewed partnerships with international institutions, and actively developing infrastructure. Vietnam also fits well due to its aggressive manufacturing boom, fast pace of digital adoption, and overall export strength. When big institutional money shifts its positions, everyday investors must pay extremely close attention because institutions consistently move based on future expectations, not simply present conditions. If major funds anticipate significant regulatory shifts or stronger currency performance, their early, silent movement may be the very first indicator that a new financial cycle is rapidly forming beneath the surface. Another key development gaining attention is the growing internal conversation around digital verification systems. Some investors claim that new, biometric-style identification processes are being actively tested in various financial facilities, although nothing official has been publicly released. What we know for certain is that the global financial system is aggressively moving toward highly secure transaction environments as an essential part of modernization frameworks. Whether implementing secure appointment-based protocols, updated authentication tools, or advanced scanners, institutions and banks worldwide are shifting to significantly more controlled environments for high-value exchanges. If Vietnam or Iraq enhances their currency handling processes, these digital systems could play a vital role. For all holders, the message is clear. Whenever you visit a financial facility in the future, expect highly modernized verification steps, mentally preparing for more formal, Structured process helps significantly reduce stress if major updates are rolled out. This new era will strictly require confidence, clarity, and patience. Many viewers frequently ask whether major currency events could potentially happen without immediate reporting from mainstream news sources. The simple and correct answer is yes. Significant financial movements often begin very quietly, especially those involving strictly controlled currencies. Financial institutions and governments typically issue public statements only after all internal processes are fully aligned and completed. That crucial difference means that certain critical updates may be clearly felt at the operational banking level long before they ever appear in national headlines. This does not necessarily imply secrecy. It merely reflects the cautious, step-by-step implementation and verification process through which financial systems routinely operate. If Iraq implements adjustments to its monetary policy, those changes could gradually and subtly influence overall market behavior well before any official announcements are issued. The exact same cautious principle applies to Vietnamese Dong watchers. Nothing happens instantly, but everything leaves verifiable traces. These traces of shifty banking patterns, changing regulations, liquidity movements, digital modernization, and verification updates are precisely what successful investors are diligently monitoring right now. Now, let's dive much deeper into precisely why your next move matters so profoundly in this fast-shifting market environment. If conditions continue to structurally evolve at the current notable pace, the individual holders who study the patterns and react thoughtfully and strategically will consistently benefit the most. This strategic preparation is not about chasing unverified rumors or rushing in blindly. It is fundamentally about accurately recognizing the perfect timing, understanding what responsible preparation truly mandates, and successfully avoiding the same costly mistakes others make when they ignore strong warnings or succumb to panic. For example, some holders have impulsively attempted to cash in their currencies at regular, retail banks, only to face questioning or even confiscation because the clerks were completely unfamiliar with the notes. These chaotic situations typically occur when people act impulsively instead of strategically planning their actions. The far better approach is to remain organized, patient, and thoroughly informed at all times. Currency transitions, whether they are gradual or very quick, consistently reward those who remain strictly disciplined. Your level of preparedness and mindset today will decisively determine your financial outcome when conditions finally shift into the next phase. Let's quickly revisit how economic stability directly influences currency behavior. Iraq's economy has been undergoing significant structural changes that are meticulously aimed toward international integration and stabilization. These changes notably include updated digital compliance protocols, new budgetary measures, and significant oil contracts. Meanwhile, Vietnam continues to gain increasing global recognition for its pivotal role in technology growth and Asian manufacturing. When nations successfully strengthen their entire economic foundation, their currencies typically experience gradual, sustained improvements in perceived value, even if official rate changes require additional time. Markets only truly respond to international partnerships, stability, and demonstrated confidence. For all holders who are watching these developments, the real strategic question becomes, how much longer until these verifiable improvements successfully translate into meaningful, tangible currency movement? Nobody can accurately predict the exact timing, but closely watching the essential, foundational steps being taken now helps informing realistic, disciplined expectations. Both Vietnam and Iraq appear to be strategically aligning themselves with global modernization movements, which is precisely why so many serious investors are keeping both key currencies firmly in their long-term strategy across various states. Investors are still consistently reporting foreign currency restrictions at multiple banks. While these restrictions, in isolation, do not guarantee anything major or conclusive, they significantly increase necessary vigilance. Some banks have completely paused foreign currency sales. Others have implemented strict new verification rules. Several have adjusted their internal guidelines purely for compliance purposes without offering any further explanation to the public. Historically, Major banks only adjust their established procedures when regulators update anti-fraud guidelines, risk classifications, or audit requirements. These types of operational shifts may be early, silent indicators of a much larger structural transition into more controlled foreign exchange environments. Holders must pay attention to the fundamental pattern of the change itself, not the unreliable rumors circulating behind the change. When multiple banks execute similar moves across numerous regions, it strongly indicates coordinated policy adjustments. Staying completely aware of these operational developments helps you remain fully prepared for whatever comes next, whether it is an official clarification, an opportunity, or simply a more structured exchange environment. Now, let's discuss the absolute necessity of risk management, because many investors often overlook its importance. If an exchange window were to formally open, holders would risk making irreversible, costly mistakes by acting too fast or blindly trusting unverified information. Sophisticated scammers always appear and increase during periods of excitement, offering unrealistic promises, deceptive emails, and fake appointments. Successfully protecting yourself mandates calm judgment, committed safe practices, and intense skepticism toward all unknown contacts. Never share personal information with any unverified sources. Never allow anyone to convince you that urgency necessitates completely abandoning caution. And never send any money upfront. Genuine, official opportunities never require dangerous, risky shortcuts. Staying rational, organized, and grounded is the single strongest form of protection you possess. As excitement naturally builds, scams proliferate, and your heightened awareness immediately becomes your best and most effective shield. Many viewers wonder how long they should reasonably hold their currencies if a major, immediate announcement does not occur soon. The specific answer fundamentally depends on your individual financial goals and risk tolerance. Some treat Dong and Dinar as long-term speculative assets. Others view them as one part of a robust, diversified strategy. Some people hold small amounts simply as a potential bonus if conditions shift favorably. What truly matters most is that you base your final decision on your personal financial situation and factual clarity, rather than external hype or immense pressure. If you chose to hold long-term, continue to monitor the markets, maintain organized documentation, and stay thoroughly informed. If you strategically choose to reduce your holdings, do so responsibly through official banking channels and with proper verification. The key is always making clear choices based on rational clarity, not heightened emotion. Let's consider global financial trends. International currencies are increasingly influenced by global banking reforms, gold-backed asset discussions, and digital transformation. Countries globally are upgrading banking software, adopting blockchain-based verification, and adjusting compliance frameworks to rigorously prevent fraud. These massive global changes create a persistent environment of transition where smaller countries, including Vietnam and Iraq, must urgently adapt to remain economically competitive. As this modernization rapidly spreads, overall currency stability often improves. Investors who are watching these global trends understand that major economic resets simply do not happen overnight. They occur in predictable phases. Each phase leaves clear signs, verification updates, changing regulations, banking patterns, and liquidity movements. Right now, many of those critical signs are visibly appearing simultaneously, making this a truly pivotal and critical moment for anyone holding emerging market currencies. One of the most absolutely important things for all holders to understand and maintain is emotional discipline. Many people impulse buy when excitement builds, then panic when markets appear frustratingly slow. Successful investors consistently do the exact opposite. They analyze consistently, prepare quietly, and strictly avoid all emotional decisions. If an exchange opportunity opens quickly, emotional reactions often lead to costly mistakes, such as mismanaging funds after exchange, rushing into unverified appointments, or forgetting essential documents. The best strategy is calm, steady readiness, organized, informed, and completely prepared. Being emotionally prepared is just as vital as being financially prepared. Now, let's return to the central theme of today's report. Your next move truly matters right now. The market is structurally shifting. Global financial systems are shifting. Bank behaviors are shifting. Both Vietnam and Iraq are actively moving in strategic directions that strongly suggest long-term strengthening. Whether major changes finally arrive next year, next month, or tomorrow, your preparation today determines whether you are optimally positioned to fully benefit when the moment arrives. Holding the currency is merely the essential first step. Holding absolute readiness is the second. Today's complex financial environment strongly calls for organization, awareness, and extremely wise decision-making. As we formally close today's extended report, always remember this powerful truth. Financial transitions rarely announce themselves with fanfare far in advance. They appear through quiet adjustments, behavior changes, and predictable patterns long before any official statements are issued. And right now, the operational patterns are definitively louder than ever before. If you have patiently held this long, stay informed, stay prepared, and stay smart. Whether the market shifts gradually or dramatically, your unwavering readiness will always be your greatest, most reliable advantage. The dinar market is actively changing, the dong market is clearly strengthening, and your next move matters more today than at any single moment in recent years. Stay prepared, stay alert, and stay tuned to Iraqi Dinar news for all the updates that matter.